Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, July 31st, 2009. Well, we're seeing a pretty muted day on Wall Street, folks. In fact, it's an extremely quiet day. There are a couple little tidbits that we need to go over today based off of the sell-off yesterday. Right now, one thing I'd like to point out, number one, is that the dollar is getting hammered, absolutely demolished today. Usually when you see the dollar getting hit, you actually notice that the markets will rally big time on that downfall of the dollar. And the reason being is that oil gets a big push and all commodities get a big push off the decline in the dollar. The interesting thing about today's action, and let me show you the UUP, which is the dollar index, and here it is all the way to the downside, trading at the lows of the day basically. The interesting thing about the dollar today is it's not necessarily affecting the markets to the upside that much. Granted, the markets are up across the board, but the Dow is up about 35 points, NASDAQ up 7 points, and the S&P 500 up about 3. That's not by any stretch a major up move in the markets, what you'd usually see off a move up in move down in the dollar. So one thing right there is telling me that this is an interesting situation we have brewing in the markets. And what might be happening here is a little decoupling of the dollar with the rise in the markets when the dollar falls. That's something extremely important. I can't stress that enough. You have to watch that in the coming days and the coming week to see if that starts to have an impact on this market, maybe taking some steam out of the bullish run we've had. Now, the other thing we need to talk about is also the move down in the markets yesterday. All right, we had a monster sell-off into the close. Per the intraday video, we talked about the possibility of that, but really what you're seeing here is the market starting to sell off late yesterday and really surging all the way to gap fill support. Now, gap fill is a major support line. You have gap fill and then you have gap window. Gap window is this one right up here. Then you have gap fill right down here. But bottom line is that you rallied and all the way, all day long, had a strong day in the market. In the last 30 minutes yesterday, you sold off extremely hard. Now, the interesting thing about today is the first couple candles rallied up, then we sold off and actually took out that low on this little bit of a tail, only to close back above gap window. Now, once you close back above gap window after trading so far below, you have to take that as a bullish signal in the market. There's no other way to take it. You have to look at that as being an impressive stand by the bulls to get that market above breaking down below this line of support. So very, very important. And sure enough, just like we would have expected based on noting that as a bullish pattern or a bullish signal, the markets did turn up there, rallied all the way up here, all the way up to resistance at the 99.25 level, then sold off and kind of gone sideways the rest of the day. Now, today is Friday, folks, so volume is extremely dead. You just have to expect that. When there's on volume, when you're looking at the middle of the summer, families, traders are going to the beach, they're going to the Jersey Shore, they're going to the Hamptons, they're going away with their families. There's not going to be the volume that you're used to on a Friday, maybe in February or maybe in November. It just doesn't happen. So the market, again, very quiet here. But the big signals to me today are to note that the dollar is getting punished today, absolutely demolished. And this is actually a possible breakdown on the dollar. We're going to discuss that in the Research Center video tonight. There's a lot to discuss for the premium subscribers to go over what this means inward to the market. So I do encourage you to sign up, get that info, because again, it will be coming out tonight. I have a lot of key levels to talk about on the market, on the dollar, on oil, on the gold chart, basically on everything, including certain stocks we have to look at about certain signals that they're sending out, like Exxon Mobil, Goldman Sachs, Apple Computer, Google, Baidu, Amazon, JP Morgan. All these are going to be key indicators going forward for next week's action. And we are coming up to a very sizable issue here in the markets. And again, that will be discussed in tonight's Research Center video. But long story short here, guys, you have the market trading sideways to slightly higher on the day. That's after a monster sell-off into the close. One thing I do like is that so far you have inside bars inside that fall. We're going to analyze that again in the nightly video and tell you exactly what that means. But it's pretty significant depending on how we play out the last couple hours of the trading day. All right, so that's a couple things right there that we need to analyze and discuss. Next up, what do we have? Well, in addition to that, what we want to look at is oil. Oil also having a nice reversal day to the upside, although it is starting to come in now. You have half an hour till spot crude closes, and if spot crude falls down, you generally see the markets come in a little bit. But notice the gap down today in oil. Oil was down as much as $1.50 earlier in the day. It's now trading up close to $2, $1.50, $2 higher. That's a $3 plus reversal on oil, and that's why you expect a bid to come in the markets. All right, that's why when the dollar falls and oil moves up, all oil stocks generally move move up, like Exxon Mobil, like Chevron, like, you talk about any oil stock, any commodity stock, generally they will be moving up. That helps the indexes move higher as well. Again, what I pointed out earlier is that you're not really seeing that in the market today. Again, you're seeing a little bit of a positive move, but considering the reversal here in oil and in the various commodities that prop the markets up, you're not seeing that, and that could be a significant telltale sign about either consolidation for another move up or a drop in the markets, a very precipitous drop in the markets. And again, we'll discuss that in the Research Center video. Okay, so having said that, let's take a look at Goldman Sachs. Goldman Sachs having an okay day, up $1 on the day. That's after a hard sell yesterday. Exxon Mobil here, taking a look at Exxon. Exxon had an ugly fall early and is actually making a slightly negative pattern here. Notice the pattern on Exxon Mobil, guys. This is an extremely important pattern recognition piece of advice here. Please know it. If you're going to watch these videos and try to take whatever you can away from them, you need to be aware that this is somewhat of a bearish pattern in spirit of bear flag forming. Now, does this mean that the Exxon Mobil is going to break lower today? Not necessarily. And you might say, well, why, if it's a bearish pattern, why doesn't it mean that? Well, because there's no volume in this market. Please understand that volume is a key component to the market moving. If there's no volume in a market, we always say you have an upside bias. What is today doing? Upside bias, because the markets are slightly positive. So exactly what we call is continually occurring here. Volume Fridays, light volume. What happens to the markets? They're slightly positive. That's what dictates on a light volume day. All right, so again, a bearish pattern development here doesn't mean Exxon's going to roll over, though, so please don't look to be necessarily shorting Exxon into the close today again. All right, Goldman Sachs, we discussed. Apple Computer having a solid day. Also, Google up to about $2.60. This is just a slightly positive day on Google. I'll show you that chart as well. Google actually coming in just a little bit here. The spiders are coming down just a little bit. The markets, the futures coming just down tiny bit here. Again, you're just basically hitting resistance levels, and I'm going to go quickly over these resistance levels for you. This is the spiders 10-minute chart. This is what you want to pay attention to. And the other thing I want you to show you guys is, let's change the color on this chart panel so I can draw it in. Take the high pivot from yesterday and draw it right through. Okay? Check this out. Take it to the secondary pivot point right there. Where are you? Right here, also the 20 moving average. So you do have resistance there. What you want to do is draw another line right above it to the next spot, and that would be your next resistance. If you break up through this level off this little bit of a pullback, off the 20 moving average and the blue trend line, you can look for a move right up here, which would be about 99.30 or so, 99.25 on the upside. Right now, you just ran into resistance at the 20 moving average in this first trend line, the blue trend line, and you're pulling off that. Resistance, those are the resistance levels. So again, right here at 99.15, then 99.25. Above that, if you were to break out, you'd actually probably head towards the 99.50 level to 99.60 level on the SPY, and then ultimately the high from yesterday. That's if we broke up into the close. I'm not sold that we're going to do that. I think you just generally have a sideways bias into the close here with a maybe slight upside bias. The one thing that would make me think is whether or not we see a hard sell into the close like yesterday. I would generally go against that only because the volume's not there today to do it, but I think starting Monday we really have to be closely watching whether or not this market has a change in character to watch. On the downside, you're going to have a little bit of support at 98.80 and then also at 98.65. Those are your big support lines. If you get through that, then you're looking at this low of the day right here, this tail at 98.40. Those will be your support levels on the downside. Again, quiet market, sideways, extremely light volume. A weird day because the dollar's absolutely getting crushed, but the commodities prices are going up. They're just not ripping, and the market's not ripping like you would think it would. All right, folks, that's all for today. Have a wonderful, wonderful weekend. Check in on the weekend technical analysis video that will be out on Saturday. And again, come back and join us at the Research Center for the premium subscribers for guidance, education, and stock picks, all included in one Research Center for $49.99 per month. Cheapest as you can find out there for the best possible guidance. Take care.